Hey guys, today I'm gonna share with y'all something that I realized while I was scalping. Yeah, just wanna show you guys something cool right here. A perfect head and shoulders pattern. And then also together with the stochastic signal confluence. Yeah. Right. So today I found out that there's this candlestick formation pattern that kind of indicated the um the top for a while. Yeah, the low time frame top. So like all this patterns here, and I figured that I would get into this trade when the stochastic prints a sell signal. So this is the overbought level. So when it turns down, when the blue signal crosses the red signal, this is where I will enter the trade. Alright. So like over here, I'll enter it here. Yeah. And then I'll put my stop loss just right above this candlestick pattern. Yeah. So for example, something like this. I'll enter the trade here with my stop loss here. And my exit will be when the stochastic crosses back over. So somewhere around here. So this appears to be a very good selling opportunity, right? Because as you can see, when this thing tops out and then when the stochastic crosses over, it goes down further some more, and then you just close it right after the stochastic turns back up, and then you make some nice profits, right? It's not really applicable to here because if you were to go by the stochastic, you would have been stopped out here, which means you make a loss because you entered here. Yeah, but the loss is still very little. So for instances such as this, you enter here, and then have a stop loss here, and then you would get out here, somewhere here. So for 1.5R, okay. So you would say that, yeah, this is quite a workable strategy. This is a really nice opportunity. And let's take a look at this. Okay, you enter it here, and then you exit it here. So it's 2R. So you would think that this will make you money, right? Like, just appears to be, but the thing with scalping is that it's not the same as regular trading because of the fees that you have to pay for scalping at such a all these small price movements like 0.13%, 0.25%. Yeah. So I've been scalping on Bitmex for a while, and I've been losing because of this fees that I neglect to calculate, to take into account when I trade. So today I just decided to actually calculate and see what goes on behind the trade. Okay, so I'm gonna show you guys. So for this trade right here, because it's difficult to actually get in on a limit order because the price moves too quickly. Like let's say you want to get in here, if you set a limit order here, it probably wouldn't get filled. Yeah, so you would just enter a market order. So and a market order on Bitmex where I trade will incur 0.075% in fees. Okay, so 0.075% of how much you put in. And for exiting the trade as well, when you do a market exit right here, I mean, you could do a limit order for the exit, but it really depends on your strategy. Like for instance, if you set like a fixed 2R strategy, then you could put a limit order here, and in the case of a limit order, you will get a rebate of 0.025%. Yeah, but if you were to follow the trading strategy, which is to close it only if the stochastic has turned back up, then you might not have the chance to get in on a limit order. So you would get out here on a market order, right? Right, so let's do the math. Okay, so you get 0.25%. This is the profit that you make, right? So 0.075%, oops, okay, for entry and for exit. So this already amounts to 0.15%. So 0.25 minus 0.15, you only end up making 0.1% in profit, right? So what so the amount of profit that you make is actually less than the fees that you pay. Yeah. So let's put this into perspective. Okay. Bitmex has this really nice calculator tool where you can calculate how much you're actually earning or losing. So see right here, 9547 and 9523. Okay. So we should always go with our calculation for the risk first. So it's 9559. Okay, so how much would you risk? Say we risk 0.0013 BTCs. Okay, so it's right here. We put in $10,000. Okay, this is the amount that you risk if the market maker fees are not taken into account. So this is something that you have to bear in mind, and you really have to calculate in the fees as part of your risk. Yeah. So right over here, 9523. Let's say close here 9523. You will make this amount 0.0027. Okay. But what happens here is that you're paying a fee of 0.15%. So do the calculation, 0.15%. Okay, so that's 15. So 27 minus 15, then it becomes 12. You only get 0.0012 BTC, which is less than 1 to 1 of your risk, because you're risking 0.0013, and that is not, haven't add in the fees yet. Yeah, so this really shows you how much the fees actually eat in to your profits and to your losses. Yeah, so you can imagine like such a trade that you think would be in your favor because it's a 2R trade, and then you end up making just less than what you risk. Yeah, so this is just something that you really have to. Okay, so basically when you catch moves like this, right, as you can see, there's no time for there's just no chance for the limit orders to get filled. It just goes straight down, and then afterwards it continues on its way, unless you get lucky with something like this. So usually we will enter with a market order here. So we have to calculate the risk of the 0.075% extra from the market order. Yeah. So as I mentioned before, it can be done easily with this Bitmex calculator here. It's really very useful. So you see that this is your intended loss, okay, 0.0013, and then 0.075% of 10,000. You have to factor that in. 10,000 times 0.075%, so you get 7.5. So your total risk becomes 20.5. Yeah, so that's how you should do it. And if your strategy requires you to take a market exit, then it's best if you factor that into your risk as well. So that makes it 28 your risk. So you can see how much the fees actually take out of your trade. Yeah, easily twice the loss that you thought you are going to incur from entering this trade. Yeah, so this is something to be very mindful about. Calculate for yourself. Yeah, and another thing I want to show you guys is that it really depends on your trading strategy. So in my previous video, I said that I would take off 60% 60% of my as the first target when the stochastic crosses over. Okay, so let's say we were to take 60% off right here. What's gonna happen is that 60% 0.25. Okay, so the price movement is 0.25%. 0.25 will take 60%, so we are only making 0.15% right here. And as we calculated before this, when you do a market entry and you do a market exit, the fees are already 0.15%. And my strategy was that once I hit the first target, I'll move my stops to entry. So I mean, conventionally you would think that this is something that's feasible, that works out, because you've already secured 60% profit and then you move your stops down to entry, so you're safe, right? But no, because of the fees. On top of the 0.15% that you've incurred when you do a market entry and a market exit over here, in this case it's only just 60%. When it goes back up to your entry price, like over here, you're incurring another 0.075%. So what's gonna happen if you follow this trading strategy in this case is that you will be risking 0.15 plus 0.075, so 0.225% to the fees, right? And as we calculate over here, you're only making 0.15%. So what's going on? You're actually losing money like this. 0.15 minus 0.225. You're actually losing 0.075%, which is the standard fee for the market order. Yeah. So this really shows you how important it is to take the market fees into account when you are trading, especially so when you are scalping, because of the small price movements, right? So yeah, and as I showed you guys also, the trading strategy is also very important. Like for the first trading strategy where I just took off everything, I actually made profit of just a bit, 0.1. But when I took just 60% off the trade and then I trailed my stops down to the entry level, I actually made a loss of 0.075%. Yeah, so yeah, this trading strategy is very important when you are scalping, and you really have to test it out to see if it works. Yeah, and not just, you can't just like, yeah, basically the market maker fees are killer and you really have to calculate it. Yeah. Yeah, so what we're gonna do here, right, when if we really want to use the risk to reward ratio to calculate our trade, is that we have to factor in the market maker fees. So we'll include this into our risk over here. So as I mentioned, it was 0.075 times 2 for the entry and exit. So 0.13 plus 0.15. So that's 0.28. So we're gonna push this up. Okay. And there we go. So yeah, as you can see, it's quite ridiculous even when you catch such a good risk to reward ratio here. It stops just here, but when you actually add in, this is how much the fees are worth, right? So you end up with a risk to reward ratio of 0.91. Yeah. So let's see. How much would it have to be for it to be profitable, right? So for it to be 1 to 1 and to 1.5 so meaning to say that you risk $1 to earn $1.50, it has to be 3.2 R. Yeah, so that's like twice the amount. Wow. Yeah. So this is just something that if you haven't already considered, I think you should, to just include this market maker fee into your loss calculation, so that you can truly see how much you are risking, and even when you're winning, how much you're actually winning. Yeah. So in the next episode, I will actually be coming up with a trading strategy to best utilize, to make the best out of the market, to get the most profits out of this. Yeah. Okay. See you guys.